Good morning, YouTube members. This is an update on the Level 2 memberships that we're in beta phase 4 because you've asked for a few things and we've brought a few things from Level 3 forward to help out. We've got 2 new measures to update and we're going to explain how they work, what they are, and how we use them to manage our portfolios and position trading. I think that's the most critical question that we all get. So let's have a look at this screen. We're going to make it full screen. You've logged in, you have a look at it, you turn it into full screen. Here are the 2 new measures: percentage greater than 50-day moving average and the probability of finding a tradable company on the ASX that's going to be up more than 10% in a month. Obviously, it's not a prediction, it's a probabilistic calculation and not advice. But these are the numbers that we use to help us identify the best opportunities, when to lean into our portfolios, when to scale back, when to have closer and tighter stops and profit targets, or when to reach a bit higher. And that's what we're looking at here right now. The conditions that we see on the ASX, they're represented by the momentum profile in the top left. This blue squiggly line is the momentum profile over the last year or so. We had the market highs. Yes, it came up above 2 standard deviations, perfect trading conditions. We all had portfolios shooting out the lights and getting huge profits for those weeks. The market fell off. The momentum fell off much faster. The wind came out of the sails a lot harder and it came back down to about an average, the mean line. In the last couple of days, it's shot back up. The market is near its highs. We got 2 standard deviations again, and that is why on the 12th of August, we see the data as being that orange dotted line representing the momentum profile being better than 94% of observations within the last 12 months. That's this purple number here that you're familiar with. The 2 additions: percentage greater than 50-day moving average. A lot of you asked about breadth and how they work together. Do we have any measures for it? Can we add them? So yes, we have. Hopefully it helps momentum profile. These were going to be added in level 3 at a later stage, more calculations that we're working on, but here you go. So the percentage of tradable companies on the ASX greater than their 50-day moving average, well, that's 76%. So that's a good measure. Ideally, we want it to be north of 70, 80. That's ideal because they're optimal trading conditions. 76, pretty good. Below 50, getting bad. Below 40, not good. So we add these together, the momentum profile that you know and have heard about and used, the breadth, the number of companies greater than their 50-day moving average, add that together, plus a lot of other measures that we have. We identify the probability of a company going up X%. Now, as of the close on the 12th of August, if we looked at 100 companies, there was a fair chance that we'd find 15 or 16% of them at random that would go up 10% within the next month. Great, happy days. But is that good or is that bad? All right. The very, 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 very bad conditions, you're probably going to find 2 out of 100 that'll go up 10% the next month. That's a really low probability. That's a terrible market condition. And when you see it falling off a cliff like we did March into April, yeah, they're the kind of conditions that we're talking about. Terribly bad conditions. We don't want to be trading them. The momentum profile will show you that, sort of choppy and heading south and looking really bad. And you're going to see the breadth indicator, this dial here, go way down to the left. And you're going to see this number here drop below 6 or 8 is not good. So in those conditions, that's when Gary's looking at a red light scenario. He might be only 40% invested in longs and allow himself to be 40, 50, 60% in shorts, ETFs, options, and the like. So in those conditions, personally, I'm not trading much at all. I've probably hit profit target and found no opportunities, or been stopped out and not found any positions to enter into. If you want to imagine, we could ask 100 other momentum traders how their positions were stacked, how their portfolios were looking. That's what these measures are really doing. So for those of us trading at home, which is a lot of the YouTube members, this helps us sort of in an instant look at the numbers and feel a bit of confidence in how the rest of the momentum traders are faring at the time. Because it can be lonely when you're bashing the charts after market close and you're at home by yourself. Hopefully this helps give that perspective, depth, and sort of community vibe. So these are the scenarios, these are the positions that we're looking at. What does a good position look like? Well, all 3 of these numbers are high. How high? This bottom number, while 20 or 25% is pretty good, if we get super nuanced, the optimal, the absolute best condition, looking at the breadth indicators that we have and a fair few other measures, including momentum profile, you put them together at the best time, you can actually get about 45% or 45 out of 100 companies just at random on the ASX we'd expect to be up 10% within a month. That's how good it can get. That is the optimal, but we're really talking about these rare scenarios up here where we're really, really peaking. So that's the measure of the momentum profile, and the breadth measures coming together to help us identify the optimal trading opportunities, how we position our portfolios, whether we shoot for a 2.75R before we take our first trades off. Gary and myself, how you trade might be similar, or whether we keep it tighter stops, more critical on the setups, really look for the A++ setups, and instead of aiming for a 2.75R of our first trade exit, we might be a 2.25 and really play it tight because we know the probabilities of hitting these 10% are much lower. Mini Vinny does something very similar. He has his own process, but these numbers here are to help traders identify those opportunities. Now, as members, we're still in beta phase, so keep sending those questions through. As you can see, we're updating the process and helping make it better and easier to use. And one question we have had is being asked, well, how do we identify those companies that are within the highs of the last quarter that Gary's been talking about in the last few videos? Just turn this little toggle here on, make sure only the 1 is on, and this list here will filter so there's only those that are within 2% of their quarterly high. You expand the date range, so you don't just have to be today's close, but maybe within the last week. And that's why you see ELS showing up here twice, because 2 days it's been within 2% of the 63-day high or 1 quarter. Hopefully it's another question answered. Thank you very much for your support and your membership, and we're in beta phase, so keep those questions coming through.